Hello students, welcome back. Today we are going to discuss the next topic, that is bank marketing. This is Dr. Ram Singh, Assistant Professor, School of Management, BBT University, Lucknow. So when we talk about banking, so what is bank? Banking is all about. So banking is all about accepting the money for the purpose of lending or investment or depositing from the public, or it can be repayable on demand or otherwise and withdrawable by check, draft, order or otherwise. So a bank as an institution dealing in money and credit facilities, and of course it helps in facilitating the savings of the public and provide loans and advances to the public. Now, when we talk about banking in India, so banking in India was originated in the last decades of the 18th century, and the first bank that was comes into existence in India was the General Bank of India, which started in the year 1786. Then come the second bank that started its operation in India was Bank of Hindustan, in which started its operation in the year 1790. Nowadays, both are not in a function. And so at present, the oldest bank in existence in India is the State Bank of India, which was originated in the Bank of Calcutta in June 1806, and almost immediately it became the Bank of Bengal. Then the period of 1906 and 1911 saw the establishment of the various banks inspired by the Swadeshi movement. And during this period, various banks like Bank of India, Corporation Bank, Indian Bank, Bank of Baroda, Canara Bank, and Central Bank of India was established during this period. So, but after that again, the First World War was there during the period 1914 to 1918, and to the end of the Second World War, that is from 1939 to 1945, and 2 years thereafter until the independence of India were challenging for the Indian banking sector. Then, when we talk about post-independence era, so of course there was the emergence of large number of bank institutions for providing finance to different sectors of the economy, and the entry activities of private sector and foreign banks were restricted by branch licensing and regulation norms. So there are certain steps that were taken by the Indian government for regulating the banking sector. So it starts with the establishment, nationalization of Reserve Bank of India in the year 1949. That was on 1st January 1949 under the terms of Reserve Bank of India. And of course, at the same time, that is in 1949, the Banking Regulation Act was enacted, and it provides that no new bank or branch of the existing bank could be opened without a license from the RBI. So we can see that RBI emerged as the Central Bank of India. Central Bank of India means that it is the bank, controlling all the other banks. So it is also known as the banker of the banks. So you can see this bank structure. Under RBI, there is scheduled banking in India. Under that, scheduled commercial banks and scheduled cooperative banks are there. Under that, there are public bank, private bank, foreign bank, and public bank can be SBI associate and nationalized banks. And private banks can be old private sector and new private sector banks are there, along with the foreign banks that are coming in India, started the operation in India. So now coming on the concept of bank marketing. So before going to the concept of bank marketing, it is very important to look at the evolution of banking in India. So when we talk about evolution of banking in India, it can be classified into three phases. First is traditional banking period. It was the period when banking is all about highly accounting oriented rather than market oriented, and the bankers were mainly concerned with the maintenance of account only. Then comes on the development banking period. Yes, the orthodox and traditional banking was changed with the nationalization of the 14 major commercial banks in the year 1969. And the basic motive behind this nationalization was to expand these financial services and banking activities to the large group of customers. Then coming on bank marketing period. Now this is the period where the growth of branches and the credit disbursement is on one hand, but yes, at the same time, banks were banks were facing the challenge of branches making loss, challenge of lack of infrastructure, and of course it leads to the dissatisfied customers. So from here the concept of bank marketing comes into existence when banks are looking for, yes, we can have some other option to meet out this challenge. So here, yes, they come up with the concept of incorporating the marketing principles into the banking sector, and here the starts with the bank marketing. So when we talk about bank marketing, it is the aggregate of functions directed at providing services to satisfy the financial needs and wants of the customer in a more effective and efficient way as compared to the competitor. It is all about identifying the most profitable market now and in future by assessing the present and future needs of the customer. And of course, it can be done by setting up the business development goals and making plans to meet them, managing and promoting the various services to achieve these goals. Now, these are some of the reasons behind the bank marketing. The first reason is rise of customer needs. Of course, customers are more aware, and yes, by then by there's a rise, tremendous rise in the needs of the customer was observed. Along with that, there was the entry of the foreign and private sector banks in India and economic liberalization in India, which leads to the entry of these foreign private banks, as well as there's a rise in the income of the Indian middle class. And yes, at that point of time, it was only the purpose of the banks to create, win, and retain the customers. So, of course, it can be done by the help of this bank marketing, and it requires to design the services as per the requirement of the customers, as per the financial requirement or the needs of the customers. Now, these are some of the major steps that were taken in this direction by blending the marketing mix in the of the services in the banking sector, that is product pricing, place, promotion, pupil, process, and physical evidence. So when coming on user of banking services, so when we talk about user of banking services, it can be general user or the industrial or corporate user. General users are the person having the account in the bank and using the banking facilities, but yes, they are having a limited access to the services of the bank. They are not using too many services of the bank. On the other hand, industrial user, yes, they are using the banking services for, of course, this segment includes the bank, include the various industrialists, entrepreneurs, which are using the banking segment for their business operations like establishment, expansion of the branches, merger and acquisition, etc. So of course, these are the customers, they are few in number, but yes, they make the large value transaction. They are the high value customers for the bank. Then these are the value-added services provided by the bank like mobile banking, ATM services, internet banking, NEFT, RTGS. And now coming on this structure of bank products, so structure of bank products can be understood by the help of the needs of the customer, right? So customer looking for the bank for tax efficiency planning, banking solution, retirement planning, estate planning and philanthropy, social responsible investing, insurance and annuity, portfolio management, and financial planning. So under the light of these needs, the banking structure of the banking products can be understood. So we can see there is a traditional services that are offered by the banks like saving deposits, currency exchange, and providing business and personal loans, safe keeping of valuables like in lockers are there, and supporting government scheme. The banks helps in disbursement of the various government subsidies and scholarship by the help of the by the use of making the use of the distribution of this is subsidies by the making the use of these banks, right? Then there are certain, of course, as the time changes, there are certain new services that are offered by banks like financial advisory services, credit cards, debit cards, and gift cards, as well as nowadays banks are offering the cash management, insurance services, and mutual funds. Now we can understand the, yes, it is very important when we moving towards bank marketing to understand the various factors that are basically that are should be considered, that should be understood for getting the knowledge about the decision-making process of the customers for the banking services. So these can be classified as individual differences, factors that differ from individual to individual, that differ from customers to customers, and of course it requires the various, various customers are having the various knowledge about the product, attitude and motivation behind using the product, as well as the consumers are having the difference in terms of resources, in terms of time, money, information reception, processing capabilities. So these are some of the individual differences which affect the buying decision of the banking services, as well as some of the environmental influences is there, like culture, social class, reference group, family situation, and learning. Learning means that what are the past experience of the customers about the that banking services. So we can see that, of course, financial institutions that expanding their business, of course, they should consider these individual differences and environmental influences. We can take example like certain culture like Islam, it doesn't allow for interest, right? So of course, it impacts on banking service. Then in certain countries, buying life insurance considered as the sign of bad luck. So many customers don't buy for life insurance as they consider it as a sign of bad luck. So these are some of the factors that should be taken care of while formulating the bank marketing strategies. Now coming on the segmentation, very important when we talk about banking sector. Of course, segmentation should be done in order to break down the large target market into the smaller mode. And of course, it will be beneficial for the banking as it helps in exploring more opportunities, designing a sound marketing strategies for each of the customers in the light of their financial needs, and policy planning and enriching the market resources. Then segmentation and marketing can be done on the basis of customer value, demography, life styles, and behavior. So when we talk about demography segmentation, it can be gender, on the basis of gender, that can be male or female. We can see that certain government schemes are disbursed, right, focusing on the women empowerment, right? So you can see that government schemes and government benefits are provided to the females only. Certain accounts are open for the females, for the upliftment of the females only, right? Certain subsidies are given to the females. So so yes, of course, nowadays there is a trend of segmenting this banking in on the basis of male and female. The another base can be the age. Of course, the people in the same age group having the same kind of needs. You can take example school-going students, university students, or old age persons. University students, they are availing the financial services or the banking services for getting education loan or for getting scholarship. Then old age person are using the banking services for pension purpose or for taking various health insurance plans from these banks, right? So you can see that yes, of course, individual in the same age group having the same kind of financial needs. Then it can be, the segmentation can be done on the basis of life stages. It can be single young person, they are having the same, another need. Of course, single young and earning person, they are having more disposable income and they can invest in more financial avenues. The newly married young couples are focusing on looking for securing their future. Then divorce without children, or the full nest one arrival of the first children. Yet once the first children arrive in the family, the new, focus on newly married young couples is shifted towards the kids. They are looking for the certain policies which can secure the future of their kids. We can take example of Sukanya Samadhi Yojana, which is for baby child. Then another phase is full nest to youngest child in no less than 6 years of age, but yes, children are still financially depend on their parents. Then children are leaving school or entering university. Some may work on a part-time basis. It's a full nest 3 stays, then divorce with children. The empty nest one is the children have left home and they are financially independent. In that case, the old persons or the parents are having more disposable income to spend on the various financial services. Right. Then empty nest two can be one of the family, one of the member of the household retire. So in that case, of course, their income gets falls. So of their disposable income will fall. So of course, yes, they are having a limited option to spend in this financial or the banking services. Then another is the older single people who are old, so they are more focusing on tours and traveling. So they are more invest on this kind of things, and they are more again focusing on their health issues. So they are spending on the health financial services related to the health insurance. and of course for saving purpose they are using the use of banking services. Then psychographic segmentation is all about understanding the attitude, belief, and preference, knowledge, and personality of the individual. And of course, yes, it is the knowledge, attitude, and belief which make the customers to buy the financial services, right? You can see that financial services intangible nature, so it is very much required that customer is having some kind of knowledge about that particular service, so that he will use that service. So you can see that banks are now organizing such awareness camp in order to make the customer financially educated, financially literate, right? Because the financial literacy, customers are not having the interest in spending in these banking services. So we can see that two individuals of the same age may exhibit the different purchasing behavior because they are having the different kind of knowledge, skills, and experiences or the attitude for the financial services. Customer having the knowledge and interest, he will spend in the various financial bank services, various banking services like SIP or mutual fund. But a customer who is having no knowledge and no idea, no interest, he is not going to spend in such kind of services. Then type of customer can be non-customer, low-value customers, medium-value customers, high-value customers, or the X customers can be there. But yes, another customer that is very important for the banks are the corporate customers. And these are the corporate customers are the customers which are different from the personal customer in their structure and characteristics. Corporate customers are small in number, but yes, they make the large transactions. They have more complex financial needs, right? So of course they require the more complete understanding of the financial services related needs, and so financial institutions should deal with these customers with the with the help of the more trained staff, right? So there are certain criteria of segmenting the corporate customer. We have seen the segmentation of the normal, that is general customers can be non-customer, low value customer, medium value customer, high value and X customers. And corporate customers can be categorized as on the basis of this demographic and geographic information, where segmentation can be resulted as industry sector, company size, company location. Then on the basis of operating variable, segmentation can be company technology, product and brand use status. Then purchasing profile, it can be purchasing power structure, buyer-seller relationship, purchasing policies and criteria. The situation factors can be results in the urgency of financial needs and amount of money involved. Segmentation can be done on this basis. Then buyer's personal characteristics, segmentation can be done on the basis of age, social class, personality, position in the organization. Then coming on targeting in banking services, yes, of course, after segmentation, there is a next step is targeting. So when we talk about targeting, it is all about targeting your customers and targeting your particular segment. It can be done by the help of single segment concentration, where the total marketing effort is concentrated on the one market segment, and the financial institution using this strategy when it has limited resources, and it is only capable of meeting out the needs of the particular segment. And of course, it is feasible strategy for the institution serving the corporate or the private market, and it is not a wise choice for the financial institutions that are dealing with the retail market. So the main benefit of this strategy for the banks is to give them the opportunity to understand and meet the requirement of their particular segment, and yes, it results in the more loyal customers. The multi-segment coverage means market effort spread to more than one segment, and it results in it helps the financial institutions in choosing the diversifying their risk by giving the customers the diversity of its range of the financial services, by various range of financial services to the customer, so that it will result in the spread of the risk. Then next is positioning, is all about the position that product brand is in the mind of the customer, and it is all about that how the product and the brand is perceived by the customer, and what is the product or the brand's personality. So we can see that some of the tagline that are used for positioning the products. You can take example of it can be done by the help of attributes, right? Our current accounts offer you extra interest. Then by price or quality, you enjoy maximum privileges with a minimum subscription fee. By competitor, you can take example like tagline like no other bank offers so much. By user, American Express, the businessman's passport, they are focusing on user. Then by application, yes, you can take example of MasterCard, which tagline says some things are priceless, for all the rest is a MasterCard. And positioning by benefit, you can take example IndusInd Bank, which are coming up with some new kind of benefit, some new kind of strategy, or some new kind of benefit providing to the customers. For example, you can take IndusInd Bank, they are coming with a video branch. And their tagline is, see how simple it is to use. Means their video branch where the customer can access the virtual access to the branch. Just by downloading the app, they can have the virtual access to the branch, so which termed as video branch. Or it can be hybrid strategy, which can be the combination of the any of the two strategies. Now coming on in the light of all this, we have come discuss about segmentation, targeting, positioning. Now we'll just have a look on the some of the latest trends in banking. So nowadays banks are more focusing on the fundamental asset of the customers, staff and capital, rather than product innovation. They're focusing on staff efficiency, increasing risk transparency, moving from the product-centric approach to the client or the customer-centric approach, and they deploy the various analytics or the tools in order to enhance the performance and enhance the profitability of the customers, better management of the clients in the portfolio, better leveraging the best of existing infrastructure. And banks are also accelerating the use of algorithmic approaches for complex back office tasks, and they are balancing cost reduction with process improvement. So this is all about bank marketing basic concept and structure of banking products and segmentation, targeting, positioning.
We are going to discuss the very important case study in banking sector, that is of State Bank of India. It is one of the largest public sector bank of India. So by the help of this case study, we try to understand the basic concepts of marketing of services. We will try to understand that how the various marketing mix are devised for banking sector, and what kind of CRM practices are implemented in State Bank of India. So let's move ahead. Let's just have a look on the introduction to the bank. It was founded in the year 1802 as Bank of Calcutta, and it was later renamed as State Bank of India after the independence. It employing more than 2,93,459 employees, and it also secured 232 rank among the world's biggest corporation as listed in Fortune Global 500 list. It has around more than 18,000 branches all over the country, and it is one of the largest public sector bank and the mortgage lender. Mr. Ashwini Bhatia has been just appointed as MD of SBI on 21st of August 2020. So this is just a brief overview about the State Bank of India. Now coming on marketing mix of State Bank of India. So as far as first P, that is product, is concerned, so we all know that these marketing mix are the tools that is used by the companies or the service provider to formulate their marketing strategies. So the first P is your product, and of course yes, product is something that is offered by the service provider to the customers in order to satisfy their needs. So as far as banking sector is concerned, product is the offering of the banks that is offered to the customers for satisfying their financial needs. So as far as State Bank of India is concerned, they are offering services in various sectors like personal banking, as we know that saving account, CC account, salary account, fixed deposit, recurring deposit. Then there is the rural banking, corporate banking, international banking. As far as rural and agriculture banking is concerned, they are running Kisan credit card, farm extension loan, poultry loan, gold loan, fisheries loan, and dairy loan, and as well as micro credit for the rural areas. Moreover, SBI loans are available such as gold loans, car loans, education loans, personal loans, home loans, etc. And SBI gives international banking services to their user. And as far as international banking is concerned, They are in the wholesale banking, SBI in the retail banking, global trade services, and moreover, it is also acting as a correspondent banking. Correspondent banks are those banks which are acting on behalf of the foreign banks, right? And also the treasury. Along with that, along with these offerings, banks are also provided with the certain another benefits to their customers like ATM services, mobile banking, internet banking, cash deposit machines, demat account, as well as investment bonds, etc. So this is all about the various offerings by State Bank of India. Now coming on the pricing. So second P, that is pricing, it is again very important in every sector. So as far as State Bank of India or any banking sector is concerned, it is basically in India governed by Reserve Bank of India. So similar with the case of State Bank of India, its pricing strategy based on competition and as well as RBI guidelines and the demand of the customers. The services provided by SBI follows the guidelines provided by Reserve Bank of India, and they use the competitive pricing. As we know that nowadays banking sector is highly competitive. So of course yes, SBI also come up with the competitive pricing, and their pricing strategy is affected by the government policies as well. For example, if there is a decline in CRR, right? So of course it results decline or increase in CRR. It results in the EMIs. It results in the EMIs for the loans. It results in the amount of EMI that a customer is paying for the loans. So it is going to affect the EMIs or the various loans that is taken by the customers from the bank. So this is all about that how the government policies ultimately affects the pricing strategies of the banks. And of course, this loan is highly risky pricing, and it depends on the assets and liabilities of the customers. So, in overall, in nutshell, we can say that pricing is somewhere governed by Reserve Bank of India and government policies. And but yes, there are certain flexibility is given by RBI to the bank for charging the amount for the additional services that is provided by the bank to their customer as per their own strategies. So this is how the pricing is done in SBI also. Now coming on the next page, that is place, that how the services are distributed to the customers. So, State Bank of India is concerned, it operates in over 18,000 branches in India, and majority of its banks are in rural areas since it is public sector bank and it is focusing on serving the pan India. SBI is present in 6 countries with over 190 branches overseas, and it also provides services through mobile banking and internet banking. It also has cash deposit stations and the huge network of ATMs. Along with that, they are also distributing their services to the customer by the help of their mobile application, that is YONO SBI, right? And it puts the India's largest range of products and services at the fingertips of the customer. It lets the customer to bank digitally, to make investment or to make shopping either in groceries or from the fashion anywhere, as well as it also provide the facility of booking movie tickets, vacations, flights and IRCTC train tickets with one single app. So this is how the services has been transformed. This is how the way of delivering the services has been transformed over the years. Now SBI also given the reward points to their customer for making this transaction by the use of mobile applications. Certain loyalty points and rewards points are given to the customers, and they can redeem further for making further purchases. Now, as far as promotion is concerned, so of course it is promoting itself to various media such as print media and audio-visual media like radio, hoardings, newspaper, advertisements, and TV commercial movies, etc. And moreover, the State Bank of India visits various campus and take part in various kind of road shows and it also provides the incentive to their staff for the better delivery of the services. And moreover, the tag adverse is very appealing, that is the banker do every day. It itself says all the things about the bank. As far as physical evidence is concerned, SBI is physical evidence through website, the business card, paperwork, brochure, furnishing, a source of physical evidence, and it also provides tangible such as diaries, pens to their employees, and the passbook, checkbooks also the medium of physical evidence, and financial reports, signage, also it is intangibility of the services. Moreover, I will discuss one thing more that I hope that that you most of you are not aware about that. I think that so. What the point is that have you noticed this key, this symbol of SBI? It is showing that it is the lock, right? You can see over here. It is looking like a lock, right? So SBI is making this logo behind making this logo. The reason behind this logo is that it is reflecting one thing. What? That it is a lock, right? So it is reflecting that State Bank of India is the key to unlock all of your financial needs, right? So it is representing, the logo is basically representing this fact. Now coming on process, so of course process